Hello, Oracles. Well, I am off on an adventure, but it was a wonderful day today in the market. We had Tesla up almost 7.5%. That's a nice climb, 2 days in a row of green. Looking good. Looks like our episode 13 ended up being a lucky episode after all, so this is phenomenal news. So where do we go from here? Do we think we continue going up, or is this just going to be another bull trap where we drop down from our dead cat bounce? Well, I honestly don't know, but I share similar feelings to Gene Munster, who over on Twitter had shared that he feels like, this is a classic sign for a bear market bull run. This is where you're in a bear market, but you have a bit of a run because a lot of the negativity is already priced into the market. But he feels like this isn't the bottom. He thinks that we will hit the bottom between July and September. So if you think about that, that means that most likely we're looking at bad Q2 numbers, which quite honestly, if we're looking at everybody's Q1 earnings and forecasts, they are forecasting for, a worse Q2. And, with all the COVID lockdowns that they had in Shanghai, even Tesla. I mean, Tesla, of all the companies out there who had, overcome all of the supply chain challenges, even Tesla right now is succumbing to that. And so it looks like we could have a weak Q2. Now, my question is, has the poor numbers that we're already anticipating been priced into the market or not? Obviously, we have yet to see what's going on with this, but we also have next week quantitative tightening happening. The Fed is going to be starting to tighten the reins as of June 1st, so that could be swaying the market also. But again, the question is this all priced in? Again, we don't know. And so the data I'm looking at is the same I've been looking at before. Where do we find the bottom? Where is it that we can say finally, all right, this is the bottom? And it's going to be when we start making higher lows. So right now we are back up on a rally. Very nice. So we'll have to start tracking what were the lows that we hit recently. Because if we start coming back down and bounce higher and then continue to go back up, then we can say, yes, we have most likely hit a bottom. So it's just something to pay attention to as we're tracking forward going into this potential rally that we have just started. Now, again, we also looked at and discussed, gap ups. So are we getting higher and higher gap ups? And, as of right now, we just started with a couple of gap ups that are a little bit higher than previous. If this trend continues, then maybe we have hit the bottom. But again, we have a weak Q2 coming in, we've got quantitative tightening coming up, and potentially a 50 basis point hike coming in the middle of June. Now, part of the rally today was most likely because seems like the market is anticipating a more dovish Fed come mid-September and maybe only getting a 25 basis point hike in July rather than a 50 basis point hike. So it seems like that could be weighing on the market and pushing us up a little bit more. I mean, again, we don't know, and I think when we do finally hit the bottom, it's not like we're going to have a V-shaped recovery like we had coming out of the COVID crash. I have a feeling the way back up is going to be just as ugly as the way down. And I think we're going to have a lot of gaps, a lot of uncertainty. It's going to be a roller coaster ride, and it may take us 2 to 3 months before we realize that we had hit a bottom. We're probably going to have, swings. Look at this. We're still swinging, 7% a day up or down for Tesla. That's nuts. I mean, we haven't really had moves like that this consistently since the COVID crash. And so looking at these numbers that we're at right now, it could continue going up and down. And again, it might swing so wildly, we may not know that we have hit the bottom. I mean, heck, maybe, the low 600s that we just tapped into were the bottom for Tesla. And we can start slowly creeping our way back up. But again, until we make our next strong pullback and find that next pullback's bottom, we are not going to know whether we are coming out of it or not. And so that's really what I'm paying attention to now. So my strategy has not changed. I do not see that we have hit a clear bottom yet. I still would like to get some more confirmation of this, and that'll be based upon our next pullback. So in this time that we're going up, I will utilize it to find maybe an exit point for some of the stocks I don't want to be in anymore so I can free up some cash to take advantage of that next pullback. And again, coming out of this, we are not going to just have a straight, smooth, clear sail. It's going to be a rough ride coming out also, and I don't see us truly coming out until the Fed stops raising rates. Historically, that's when it happens, and I have a feeling that's what's going to happen this time around as well. And so the key dates I'm looking at coming up are going to be June 10th for the CPI data, June 15th for the FOMC meeting, and sometime in the first half of June, we should be getting the proxy statement from Tesla, and this is going to give us more indication and information about what could be going on at the annual meeting, and perhaps as far as what could go on for a split. I don't know if we will get all of the information for it, but we should get everything that we need to know for the annual meeting coming up in the first half of June. So those are the near-term dates that I am looking at to pay attention to see which way the stock is going to swing. Let me know in the comments below. Do you guys think that we just hit the bottom for Tesla and the market? Or do you think that we still have another dip coming that's going to take us down further? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of my daily trades, latest stock information, and everything about Tesla. Thank you so much. Have a great one.